First, want to thank the partnership with Marsh in helping to sponsor and participate and engage in this webinar. Matthew McCabe, who's the cyber critical infrastructure leader for Marsh McLennan. Michael Sayers, who's the senior vice president and the cyber practice leader for Marsh. We also have 3 panelists that will represent different views and perspectives from small businesses. Ian Webb, the Senior Vice President for Risk Solutions in Cyber and Intelligence for Mastercard. Wes Lowe, the CEO of Ohana Pacific Health and Hale Makua Health Services. And Stan Stahl, who's been a tremendous partner to CRI as the Director of Information Security and President of Secure the Village. We're really looking forward to this conversation as we look at CRI's stakeholder group, which is small businesses. As many of you know, the Cyber Readiness Institute brings together senior leaders of global companies to help inform the development of free cybersecurity tools for small businesses, really looking at human behavior. We launched in 2017, and as a result of the work that we've done, we always are identifying where the current challenges are as well as the current trends. And I think it doesn't take too much to recognize the issue that cyber insurance presents for small businesses, an opportunity, a challenge as everyone looks to demystify it. And so what we're really hoping to have in this discussion is an understanding of cyber insurance for small businesses, help to answer the questions that you have, and please be very forthcoming and direct in what you need to know as we really try to get into these major issues. And so what we're going to start with is a presentation by Marsh to kind of walk through the cyber insurance market. And then we'll have presentations by each of our panelists. And then we'll open it up to Q&A, and I'll be moderating that. If you can put the Q&A in the chat room, I'm sorry, put the Q&A in the Q&A section, which is the icon on the lower right of your screen, then we'll facilitate that discussion and we'll go through that and moderate it. So without any further ado, it's my pleasure to introduce Matthew McCabe and Michael Sayers, and we look forward to this discussion. Thank you.
So thanks very much, Kirsten. As kindly introduced, my name is Matt McCabe, and I am with Marsh, and Marsh is the world's largest insurance broker. And we're here to kind of just describe cyber insurance a little and talk about its role in overall cyber resilience. So if we could jump to the first slide, you know, we always say and are completely supportive of the security industry and government industry in bolstering cybersecurity, that there is no 100% solution for cybersecurity, and it is a risk to be managed. And insurance plays a very important part of that. Of course, it plays the role of mitigating financial expense when you've had a cyber incident, but it's also morphing so that it's playing much more of a role in helping companies solve for developing incident response and even putting protective practices in place. So to start off, what is cyber insurance? I think it's easy to think about cyber insurance in 3 distinct buckets. You have first-party response. So you've had a cyber incident and you have out-of-pocket costs, and those costs can take a lot of different shapes. Number one, you're likely hiring some counsel and some forensic services to figure out exactly what happened. You might have public relations that you want to promote or contend with in order to explain to your customer base what just happened. You might have data that's been corrupted or destroyed that you need to pay to restore that data. Very, very famous right now, you might have a ransomware event for which you have to make an extortion payment, and you might have specialty services involved with negotiating with those ransomware extortionists. So think about, you've had that cyber event and you've just got all sorts of costs coming to you that you've got to pay out of pocket. Number two, you've had that cyber event and you're facing a lawsuit because of it. And cyber insurance will reimburse the cost of your attorneys and for whatever settlement or court judgment might come down as a result of that event. And that's usually associated with privacy breaches, but we're starting to see growing claims on the side of cybersecurity breaches where customers might be impacted by a company's cybersecurity failure. And that last bucket, number three, is going to be, you've had a cyber event that's disrupted your operations. You're no longer an operating concern. You're losing revenue, you've lost income, and you might have extra expenses if you want to continue the operations of your business. So it's the lost income and extra expenses that might be associated with a cyber event disrupting your business. And that's very, very commonly tied to an extortion event involving ransomware. Your network seizes up, you don't have access to it. Not only are you dealing with the extortionist, but you're dealing with the failure of your business to being an ongoing company. So that, in a very brief sense, there's obviously a lot of nuances behind all those, but that's a very, very high look at what cyber insurance is as a product. Some things that it's not. If you provide cybersecurity services to another company, your failure to correctly provide those services is not covered by cyber insurance. That's called an errors and omissions. That's a different type of insurance. Or if you have property that's affected, you have physical damage as a result of a cyber incident, that should really be found on your property. The thing is that because cyber touches everything, there's a lot of growing overlaps. So it's very important to look at your programs to see, well, where should my cyber insurance be and where should my errors and omissions be? Or does my property policy adequately cover cyber risks? All growing questions in the insurance industry because cyber is such a quickly morphing and developing field. Next slide. So I'd kick it over to my colleague, Mike Sayers, who will be able to tell us a little bit about what we're seeing within the cyber insurance industry.
Yeah, thanks, Matt. Nothing too cryptic about this slide. It's pretty straightforward. Really, the important advance to pay attention to initially is that top row, right? Revenue. Revenue is the rating basis for all cyber policies. It's obviously not the end all be all. There are other exposure factors in there, but revenue is what your insurer would apply their rate to rate your program, right? So if we can generally use benchmarking as a helpful tool to assess limit adequacy. In the cyberspace, it's not the end all be all, but this is kind of what we're looking at to benchmark in the revenue range. Matt, I believe this is 25 million to 750 million.
That's correct.
Yeah, so if we look and go down, let's use the 25th percentile as an example. Total program limits would be 3 million, total program premium of 20K, total program deductible of 25K. And we break that down further by price per million as we go down. Now, obviously, all this is to be taken with a grain of salt. It's not hard and fast because within the 25th percentile, there is some variance, but in any percentile for that matter. But this is a good snapshot of what the pricing environment looks like in the current market. I can tell you this looked way different, 2 years ago. Maybe even 3 years ago. I think the interesting thing to remember about cyber insurance is that it is a newer product, right? So more of the traditional P&C lines, we have 100 years of data under our belts for those. Where this, I would say, has really been a very meaningful product post 2000. So this data really shifts year over year as we get another year under our belt. But this is generally what the pricing environment looks like for that band of clients. If we want to go to the next slide, this is probably the more meaningful data point to look at. As you can see, the market is hardening. What this slide is evidencing is the rate increases on a quarterly basis starting from Q2 2020. So we went from an average rate increase in that quarter of 10%, and we're all the way up to almost 51% in Q2 2020. Now that's a pretty steep rise. Pretty quickly. The general P&C insurance market is in a bit of a hard market across the board. But if you compare this to some of the other lines of business, the cyber rate increase, was pretty steep compared to the rise in other rates. Now, what's driving this? It's mostly what Matt alluded to before, kind of the topic of the day, if you will, which is ransomware. It is increasing in both frequency and severity. And I think that's another interesting piece about cyber. Shouldn't be a surprise to anybody, but there's going to be fire, flood, wind, and quake. In cyber, we're trying to stay ahead of an ever-changing threat environment, and underwriters are incurring losses, which is driving most of this rate increase up towards 50% for this quarter rate. Probably a good segue into the last slide to really put into context what's going on and what we can kind of do to make, or what entities can do to make themselves not only more safe, but a more attractive risk to the cyber insurance market. And I'll kick it back over to you, Matt.
Yeah, so just to point out a couple of things for the information on cyber insurance, that of course applied to all companies, but Michael very importantly touched on companies have all sorts of different varying risks. So how you're going to be rated by cyber insurance companies will in part depend on how big you are. Are you a manufacturer? Are you a healthcare concern? Are you a utility? There's all sorts of complexities that go into those numbers. I will say though that for the third slide where we saw the pricing increase, that's pretty universal across the scale for all companies. That's because all companies are facing the scourge of ransomware. One of the outproducts of that are cyber insurers are asking very specific questions about how are you prepared for a ransomware event? What do your cybersecurity practices look like? And most importantly, do you have these very important controls in place? And you'll see that multi-factor authentication amongst your applications and your operating systems. Do you have endpoint detection and response in place? How are you patching? How are your backup data handled? Is it securely offline? Certainly, if you are backing up your data, you don't want that backup data exposed to the same ransomware event that would get your primary live data. Do you have remote desktop protocols exposed to the internet? How are you securing privilege access management? Are you following the principle of least privileges? How are you filtering emails? And what do your operating systems look like? Do you have end-of-life systems that are no longer supporting by patching? And if you do, how are you separating that from the rest of your network? And certainly the answers to these questions are determining whether a client is insurable, what the pricing that they're going to be insured at, and having really a material effect on the companies that are buying cyber insurance. So, this is kind of my initial point, how cyber insurance is really becoming an assessment vehicle of what controls companies have in place, a touch point, if you will, for what cyber hygiene looks like, and really ultimately an incentive for companies to perform better cyber hygiene. I would kick that over to Kirsten then for a follow-up by the rest of the panelists.
Thanks very much, and I appreciate the questions that are being. Make sure. Oh, sorry. Thanks very much. I appreciate the questions that are being put in the Q&A, and we'll be getting to those once we hear from our panelists. And I know there are a few coming in. So we'll start with Stan Stahl. Stan, that's great to have you, and thanks for taking the time to participate in this group. Stan, you're on mute.
Great, thanks, Kirsten, and yeah, thanks as well to Marsh for putting this on, because we're living truly in a transitional moment in history with respect to cybercrime and all the challenges that we're facing, and it's one of those things that the end users typically are kind of the last to know, if you will. So things like what we're doing today, I think is so very important. I mean, my experience in this field goes back about 40 years when I was working as a security engineer at the kind of very beginning of the field. Worked at the White House, Strategic Air Command, did nuclear missile work, places like that. And I've spent the last 20 years as a practitioner working with small and medium-sized companies. So I kind of seen what goes on with them. Director of Information Security, as Kirsten, as you said, with Miller Kaplan. And then I started Secure the Village going on about 5 years ago, because it was really clear that we had to reach the end users, everybody from the boardroom to the living room, as we now describe it, who has to kind of responsible for managing all of this stuff, for taking care of all of it. And it's a challenge, because there's this whole cyber stuff is very abstract for people who don't live on it, don't live in it. We work to focus the energy of the community around reaching out to engage and educate and motivate the end users, if you will. We have a free weekly newsletter as well. You can sign up on our website for. But I want to go on to 3 points I think that flow out of what Matt and Michael have talked about. First of all, this cyber stuff is really very real, and I'd like to think of cyber insurance the same way we think about automobile insurance. You know, no matter how careful we are, accidents happen, and the last thing you want is to get into a car accident and not have insurance. It's like, how did that happen? And I think we need to think about cyber insurance exactly that same way. I've seen way too much over my 40 years of experience. We are at risk. We are threatened. We are far more vulnerable than we realize. And we have to take this stuff really, really seriously. I mean, a large loss, if you think about it, is only a mouse click away. That's the reality of cyber. And with that, we get kind of to point two, that look at the things that Mike talked about, the cyber controls. These are real, and the devil's in the details with these kinds of things. So it's not enough that, you know, your IT people say, yes, we're doing it. You really have to be able to go in and make sure that, for example, when they say our backups are offline, are they really offline? Can you really recover should you need to? Are your people properly trained? I mean, do you run phishing attacks on a regular basis? Something not on the list, but vital is all the rampant online bank fraud that's going on. So also making sure you've got controls that if you get a request to wire money, pick up the phone and verify the request. Don't just wire the money. We saw $900,000 last week go out the door in a business email compromise because the receiver of the request to transfer didn't bother to pick up the phone. So keep that in mind. And ultimately, the success of the program really depends on leadership. It's your company, you're the executives. I'm speaking to my audience here, if you will. Tone starts at the top, and you've got to have an executive in charge, leading your cybersecurity defenses. You've got to make sure you keep information security top of mind. And with that, we get to point three, which is that you're not alone. Just look at, you know, whether it's Marsh and other organizations on the private sector side, whether it's organizations like the Cyber Readiness Institute, Secure the Village, and others on the nonprofit side. Your IT people can join CompTIA's ISAO. They've just started. You can look up ISAO in a Google search if you don't know what it stands for, but get your people involved in that. And take advantage of all the government and other resources that are out there. CISA has lots of resources, the National Institute of Standards and Technologies and all. Don't view it as if you're alone. I mean, meeting the cybersecurity challenge means getting everybody involved. That's the whole concept, that it takes the village to secure the village. So with that, thanks, Mike and Matthew, and Kirsten, back to you.
Thanks very much, Stan. We'll go now to Wes Lowe. Introduced as the CEO of Ohana Pacific Health and Halemakua Health Services. Thanks so much for being here.
Yeah, thank you. I guess it's good afternoon for most of you folks. Still morning time for us here in Hawaii. So I guess I'm the poster child of the small business that almost got it right and didn't quite get it right. So we recently had a ransomware attack. But interestingly, you know, we our company is about 100 million in revenues, but we just recently combined. So we actually doubled in size. So one of our companies had cyber insurance. The other company had started a fairly robust security program. We just moved to the cloud. We had the cloud access security brokers. We had, we're working on our info security plan, so on and so forth. So we were charging down the way. We were negotiating new contracts with some of our partners and requiring cyber insurance. Of course, on one of our companies, we didn't have cyber insurance yet. And unfortunately, what happened to us was a legacy payroll vendor had a ransomware attack. And the problem we had was they didn't have cyber insurance as far as we know. They actually didn't do their forensics right away, even though we pleaded with them to do it quickly. And so too much time had passed. They pretty much were non-cooperative. We basically, and we have about 1,500 employees. We had to, we've lost, they jailed all the data. Our data was not moving over very well to it. And we were relying on some other payroll things that basically we were working off PDFs for about a month, trying to recreate all our PTO, our salaries and everything. Just a horrible situation for us. We actually then did a probably the fastest conversion of a payroll that you could. We actually had stalled it because we were working on an overall human capital management plan. We don't even know, we ended up having to buy credit monitoring for our employees. We do not know if it's a breach. Right now, it's just ransomware, but time passes. Yeah, we're not sure when this will happen, right? They never paid the ransomware as far as we can tell. We are in touch with the FBI and everything, but so far so good. I think best intentions were for us to get the cyber, et cetera. So I guess I'm just a poster boy for this, of things that you don't think of. We were taking all the right steps internally. What we forgot to do is keep tabs of our partners, because that matters. And we unfortunately found out. So it is a pretty sore lesson for us. We seem to be doing okay. I think my staff doesn't like me anymore because they worked about 24 hours a day while they were trying to recreate all the payroll records. And we're still struggling through that. So there's other costs to this. I'm certainly not an expert in IT or insurance, but I would say if there's lessons learned for me is get cyber insurance, listen to your insurance brokers. We used a lot of resources from that to try to figure out how to deal with this and how to work with people. Just really work on that info security plan. I think I heard some previous prep calls, and cyber insurance in itself does not solve the problem. It's your info security plan that does. And again, just being the poster child, and I think we're doing okay right now and keeping our fingers crossed. But with these things, with these ransomwares, is you never know now, right? It could spring up later, and it's too late. We didn't have the cyber insurance anyway. So we were actually getting quotes on it when this happened, so we never bound. So don't do like us, and work with your insurance company. So anyway, thanks. I hope that was helpful for your panel. Thank you.
Thanks very much, Wes. And I think we'll certainly come back to you in some of this, because you're certainly not alone. And I think the questions around third-party risk management, and particularly with M&A, with mergers and acquisitions, we're seeing more and more of that, because you don't always know where all your access points are. Supply chain is not a linear vertical. There are a lot of different components to it. So appreciate you talking so thoughtfully about this.
Kirsten, can I just follow up on something
Yeah.
Wes said that I wanted to highlight that I think is really important, right? One of the biggest benefits of the cybersecurity policy is exactly what Wes was talking about, the incident response piece, right? A lot of entities aren't exactly sure what the first step is when they suffer a breach, right? A lot of the benefit of the policy is that you have access or introductions to third-party vendors who can help you handle the breach. And some insurers even have in-house breach response teams and data breach coaches that they can introduce you to as more of a turnkey solution, if you will. So a lot of the benefit in and of itself is not only the actual risk transfer, but it's the introduction and facilitation of engaging the third-party vendors who can help you appropriately handle said breach.
Thank you, Mike. Appreciate that. And so now we'll turn it over to Ian Webb from Mastercard. Ian, thanks again so much for joining us.
Thanks. Glad to be here, and thanks to CRI and to Marsh for hosting this event. It's a really important topic, and so much more important than, let's say, 18 months ago. So I've had over 20 years of experience in various types of risk management, a lot of it on the security side. And I've recently joined a new team at Mastercard, which is focusing on leveraging the security assets that Mastercard has acquired over the last year or so, and particularly focusing them on providing value and providing benefit in the cyberspace, particularly and including cyber insurance for small businesses. in terms of, the challenges and the opportunities as we see it, small business, we all know small and micro businesses are a huge part of the economy here in the US and globally, employ a lot of people, generate a large proportion of GDP. Small businesses have always been inherently vulnerable to cyber attacks, and that over the last year plus has just gotten much worse as they've had to pivot online in order to survive. The recent data shows that 50% of small businesses have experienced a cyber attack, and a significant majority of those typically go out of business following an attack. So we see the opportunities broadly as educating small and micro businesses on the risks they face and the basics of protecting themselves against cyber attacks. What's good basic hygiene? 90% plus of cyber attacks are caused by human error. 90% plus involve malware that's delivered by email. Phishing attacks, people, as previous speakers have said, people clicking on emails that they shouldn't click on, uploading, downloading files that they should have been thoughtful about. So a big part of this is avoiding the need to call on cyber insurance. But as Stan said, accidents happen. As Wes was alluding to, partners matter and can affect you. So cyber insurance is a really important part. It's a backup should, despite best intent, even good hygiene, none of that guarantees that you won't be subject to a cyber attack and that it won't be successful. So cyber insurance is your ultimate backup plan. It provides a means for a small business to recover from a cyber attack should they be unfortunate enough to suffer one. We are working with a partner to provide cyber insurance that leverages our cyber assets, Risk Recon and CyberQuant. And the focus is to use those cyber assets to assess the cyber status and the cyber health opportunities of individual small businesses as part of the assessment that goes into the underwriting process and the pricing of the policy, but also provides feedback to small businesses so that they understand where they have potential gaps if they're not deploying patches on a frequent basis. Some small and micro businesses they're not particularly sophisticated. They may not realize, even now, they may not realize that some of the things that they're doing or not doing are putting themselves at unnecessary risk. And nobody, everybody who gets a cyber insurance policy, they're hoping, like a car insurance policy, that they don't actually have to use it. So we're looking at the full range of support we can provide in terms of education and a backup plan should the worst come to pass.
Thanks very much, Ian. And thanks to all of you for your thoughtful insights and perspectives. And I think we've hit on certainly a lot of issues that we've already getting some great questions. I did want to just start with one broader question to Marsh that we've looked at. As everybody knows, I think as we've looked at some of the efforts in nonprofits, Stan's work with Secure the Village and the Cyber Readiness Institute, focusing on the basic controls that typically are grounded in human behavior, multi-factor authentication, phishing, passwords, all of these things that we've talked about. To Marsh, the question that I have is there a way for you to measure companies that are doing those basics in cyber hygiene and cybersecurity standards that actually impacts the rate that those businesses get? So not just the ability to be insured, but actually kind of like a good driver discount that some of the auto insurance has. That if you do these basics, then you'll have a discount for being able to do that. Looking at this, what we're trying to create, the positive incentives in the market, it's clear whether you're small or big, we're still seeing repeatedly that the basics aren't being done. And so there seems to be an opportunity for the insurance industry to be able to weigh in on that. Is that something that is offered? Matt, I think you're on mute.
Sorry about that. So I think that the concept of incentives are often discussed as the stick and carrot approach. And we hear that a lot about, well, where are the incentives to bring people towards better hygiene? And I think they're there, but you could also express them in a way that if you're not doing basic hygiene, you're probably not qualifying for insurance. One of the other questions posed were, are cyber insurance policies paying off? They're paying off at a pretty rampant pace at this point. And insurers are becoming very critical of companies that they're insuring and how due diligence is being conducted over the protection of systems and data. So I think that there's certainly a minimum standard of competence before you can even make an application for insurance. And then depending on where a company comes out on that scale, that's how your premium will be determined. So if you're lacking basic controls, but a company is still willing to insure you, you can expect to come out on the higher end of premiums of companies of your profile. And the question ultimately is, how is that determined? We use a self-assessment that's based on cyber standards that are commonly accepted from the NIST framework or from ISO 27000, from SANS critical controls. We ask a large number of questions to get a really robust profile worked up. And I think that carriers get a pretty good sense of the company based on what their overall exposure is, the potential for that, and how they're protecting against it, just from that self-attestation.
So we'll go to the questions. I do, and we'll get into this a little bit deeper because I want to just touch on this. I think the challenge that we're seeing are these companies that are insured, and we've certainly seen it in the news lately, like Colonial Pipeline, and we saw it with SolarWinds, that weren't doing the basics. And so it's a question of, are there incentives that the insurance market can offer that goes beyond the self-attestation? I know Mastercard, in using Risk Recon, is looking at some of these scoring mechanisms. And so could those actually help with the market? Because if it doesn't seem to be anomalies when we look at companies that aren't doing the basics. And I think self-attestation, also to Wes's point, the company could be doing it, but how are they connected to other companies that have that vulnerability? And so being able to take a look at that. So I'll start with one of the questions that we got in the Q&A. And again, if you have a question, please submit it through the Q&A, which is it's on your bottom of your screen next to the raise hand icon. Do insurance companies generally consider risks and therefore premiums differently for FedRAMP certified organizations and products? And for those of you who don't know what FedRAMP is a government certified program with controls and security controls. And for a long time, it was seen as a very difficult and challenging process. I think in some ways it is, but for those companies that are really going into it, they're seeing it as very helpful in providing discipline and rigor when it comes to cybersecurity, and that it's actually creating a very positive incentive. And it's had much more positive effects and impacts across companies that are doing it. And you just saw a couple of weeks ago with the executive order, an investment in FedRAMP to say to modernize it and to really help businesses adhere to it because of those controls. So the question is, and this kind of goes to some of the behavioral issues, are there incentives in the market that are aligned with companies that do more, such as being FedRAMP certified?
So my response on that would be any incentive is way too informal. And I would explain, so I mentioned that carriers are basing their assessment on the NIST framework, and I think that FedRAMP is largely tied to the NIST framework methodology as well, that they inform one another. But, so on Marsh's side, what we've developed is a program called Cyber Catalyst. And what we did with a bunch of our partners who are carriers is kind of assess technologies and strategies and different protocols that companies use from certain vendors. And the carriers will actually designate them as a Cyber Catalyst product or a Cyber Catalyst service. And that will identify to us that the market looks at that product or service and feels that they mitigate cyber risk. And that way we help explain what our clients are using to the market. We're trying to build that bridge. FedRAMP is another great tool, but I don't think that the insurance industry is educated about it enough. And I think that we're starting to do things where we're considering what some of these federal programs are. I would suggest the DHS Safety Act as well as another one where a company has shown its benefit for security, and we should be putting more consideration to that on the insurance side because it's already served an evaluation.
So FedRAMP is actually connected to like the NIST standards, not directly to the voluntary framework, which is those of the small business that are on the line know it's 98 controls that are a little bit overwhelming in looking at all of the pieces. And I think it's interesting on the Cyber Catalyst program. Are the companies in the program primarily technology companies? In other words, it's asking companies to use technologies, or can you give us a bit of a profile of those offerings that are included in Cyber Catalyst?
Sure, they're overwhelmingly technology companies. You know, if I can name some, they're very common use vendors, Palo Alto and FireEye. And there's a host of, you know, I think we're up to about 25 different designated technologies now.
So as a managing director of CRI, I have to make a plug for, while technologies are great, we have to incentivize the human behavior and be able to really look at how the employees are doing. And because I think that's what we hear a lot from small businesses is not the ability to not bring in the FireEyes and the big companies, but how do we actually create that resilience through human behavior and through doing the basics. And I'm sure there are technology companies that you've got that are looking at multi-factor and all of those. And I think they all play a key role. The next question is, and I guess before I go on, any Ian or Stan or Wes, do you have any perspective also on those questions as they've come through from where you sit?
Yeah, I'll jump in on some of that, because whether it's you know, you got FedRAMP, CMMC, ISO 27001 is another example of where you've got to go through a formal process to get certified. So somebody's actually looking at the devil in the details. One of the challenges we regularly see, and this is not on the Secure the Village side, it's on the Miller Kaplan side, which is where we provide information security management services for small and medium-sized businesses, mid-size and smaller. And we will regularly go into a new client and we'll be told by IT in particular that everything's okay. We've got it all nailed down. And then we do an assessment and we find that's just not true. So that it goes to a human fault that none of us as humans have the ability to know what we don't know that we don't know. I mean, there's that layer of, you know, what we see is what we think is true. And unless you've got an outside set of eyes looking at it, there's just so much opportunity for self-delusion here. And I would encourage every business to take that second look and just make doubly sure that what you think is reality actually manifests reality. And that's part of the value of the FedRAMPs, the CMMCs, and so on, because they'll force that second look on you.
Go ahead, Ian. I think you're on mute still.
Just reinforce the human behavior is so important. You constantly see stats that, you know, you do password analysis, an enormous percentage of passwords are still 1, 2, 3, 4, 5, 6. You know, there's only a certain amount that technology can do to prevent that. If people are going to behave in that way, then we're going to continue to have problems despite any amount, an arbitrarily large amount of money spent on technology. So it's got to be a combination of the right tools and the right awareness and engagement by and everyday presence by employees.
Well, and we've all heard the pyramid, it's the human beings at the bottom, the processes and the technology. And if the humans aren't educated, all the technology in the world still allows for somebody to click, even the firewalls or on their mobile device. So it really is that foundation. Wes, before we move on to another question, is there anything that you wanted to add?
Yeah, I just wanted to add real quickly, you know, I think I saw in the Q&A chat, they talked about an IT assessment. I would actually trump that a little bit in saying is the way to deal with this is more an overall risk assessment. looking at your frequency and your risk associated with it, because I think like Stan and Ian said is what we don't know. I mean, you don't know what you don't know, and I think you just got to keep on layering down and have standard business protocols and risk assessments that are part of your life, because there's more and more threats to our businesses every day. I think is basically, that's the only thing I got to add. Thank you.
Thank you. So go down now to another question. This is the question. In our experience, most SMBs don't understand where they have risks and vulnerabilities in their IT environment to cybersecurity attacks. We regularly identify those risks and vulnerabilities when we conduct an IT assessment before we provide prospects with a proposal for managed IT services. Most SMBs believe that if they have cybersecurity insurance, the company that provides these services will cover their losses. Aren't there caveats associated with cybersecurity insurance that require controls to be in place?
So overall, I would say the caveats in cyber insurance do not require controls. Language in the policy is not meant to controls. What there is a dialogue beforehand, which is the underwriting, and the company has to represent its controls. And if it's made some material misrepresentation, then you could later have an issue on a claim. And that's true for any form of insurance for any misrepresentation. So for the IT standards, those are usually not very, very rare to see those in the policy. That's purely part of the underwriting. But, I would extrapolate from that complete agreement with some of the comments said on the human side that for the IT controls, you could test your IT controls all day. And if you don't have competency and cyber awareness in your organization, then you're still going to fail. So the cyber insurance underwriting has to go a lot deeper.
Yeah, and I think a good distinction here to be made is it's not just about the controls, right? It's also about the inherent threat environment specific to your entity. So that might depend on whatever industry you're in, however many employees you have. So it is coupled with the cybersecurity. But to Matt's point, all of the quote unquote requirements are fleshed out during the underwriting process. That's when the questions are asked and answered.
Yeah. We've also seen a situation where, acting in good faith, IT says they have certain controls. They don't understand the technical depth of the question, do you have X? So they think they have it, but when you look more deeply, they don't. And one of the concerns I've had with for several years has been that inadvertent saying erroneous things on an application that can open you up to a claim being denied. But you've done this in good faith, and there's that real need to understand here what these various defenses mean, and that's not yet fully common knowledge.
Yes, Stan, that's a really good point, actually. And I think, we always encourage our clients to, if there's some ambiguity around the question or answer, provide more color, right? It might be a yes, no answer on the application, but there's nothing from preventing you in putting an addendum to that application. A good example of that would be multi-factor authentication, right? Very hot button topic at the moment, largely viewed as, the most critical control in preventing ransomware, at least in the underwriting community on the insurance side of the house. A lot of them in their applications just say, do you have multi-factor authentication? We know it's not as cut and dry in that, right? There's several different applications in which you can implement multi-factor authentication. So we would always encourage, if you are in a situation where the question is not as binary as they're making it seem, definitely provide some color around your answer.
Mm-hmm. That's good. What's the great quote? The future is already here. It's just not equally distributed. That's the world we're kind of living in here.
Wes or Ian, anything that you would like to add to that? No, okay.
No.
So another question, how often are claims denied, and are there certain controls required to qualify for insurance or that could impact your payout in the case of an event happening? And again, I think we have different iterations of essentially what's required to get a payout and things that are expected. So I think kind of take this question and push it as broadly as you guys can. Over to Matt and to Mike.
I would say that it's been our experience in the cyber insurance market, going back to the days where privacy breaches were the leading risk and coming to today where ransomware, that carriers would probably say claims are paid out way too often and they need to do something about it. And they are in the form of scrutinizing controls more greatly. And for companies that have substandard controls, either limiting the insurance available or are straight out denying their, not quoting, denying to quote the risk. You mentioned before some companies that had been discovered in hindsight to not be doing some of the things that should be done. I would say that there's kind of always a tail to cyber insurance, that unfortunately a policy might get written during a softer market where maybe the scrutiny was not as good. And especially with ransomware, how things have accelerated so quickly. I mean, the scrutiny, and Michael went over that with the chart a little bit, how we've leapt up in the premium increasing. You could picture the level of scrutiny following that same trajectory. So what was done today is not close to what was done a year ago. We're definitely a lagging market. So probably it'll take time, but we'll correct the ship around where controls are and where companies' understanding are on cyber risk. But until then, I mean, the cyber insurance industry has paid out a lot of claims, and that's one of the issues about cyber ransomware that we're dealing with today.
Yeah, and I would also add a lot of, there have been some publications around the legitimacy of cyber insurance and if it pays claims or not. And I think a lot of the well-noted instances where it was not on a standalone cyber insurance policy. It was, maybe they endorsed some cyber onto their property policy or onto a crime policy. So I think in those instances, we're really dealing with and discussing right now a truly robust product that intends to pay these claims out.
So there's been a lot of discussion, obviously, in the market following Colonial about how the market is incentivized around ransomware. You hear a lot of national security experts that are involved in some of the classified intelligence talking about how criminal actors troll for cyber insurance payouts and what those numbers are, and that's how they're being targeted. And while there's still a lot of information to be released about Colonial Pipeline, a lot of people said, why, that was such a low ransom. And so there's speculation that that's what the policy covered, et cetera. Just from Marsh's perspective, how do you view covering ransomware from a market incentive perspective and what that looks like?
I view ransomware as not having an insurance problem, but having a cryptocurrency problem, because if it wasn't for the ability of cryptocurrencies to make those payments anonymously, then this wouldn't exist or wouldn't exist on the scale that it is. So that's really probably one of the aspects. Look, there are three parts that enable a ransomware attack. The company's vulnerable. There's a criminal organization that's protected within a safe harbor jurisdiction, and the ability of cryptocurrency to get the ransomware payment from the Western jurisdiction to where they are protected. And that's really all it takes. I don't think that the likelihood of being exploited for a ransomware event is tied to cyber insurance. I think it's tied to the vulnerability that a company can take advantage of. I think it's more likely that the overall demand is going to be in relation to what the revenues of that company that's the victim is. I haven't seen a data point at all that talks about the greater likelihood of tying cyber insurance to the likelihood that you'll be exploited in a ransomware attack. I've never seen that attack. And as a matter of fact, I think the incentives are completely in reverse. So if you're carrying insurance, then you have a backstop against what your business interruption will be. One of those covered costs, lost income and extra expenses. You have a backstop for keeping your operations going. Whereas the uninsured company doesn't have that backstop, and they better pay right away. Otherwise, they're just going to lose out on that lost income and extra expense. So I think that there's less incentive to pay. The problem is that if you're the damaged company, you want to get your operations back online as quickly as possible. you want to mitigate this event for your ongoing business and for your customers. So, I think that insurance, if anything, serves a very useful role, but I don't think it weighs into the likelihood or provides an incentive for ransomware events at all.
Stan, Ian, or Wes, is there anything that you'd like, because I know each of you has probably seen this, and obviously Wes, you're first person, in different ways, and how you might look retrospectively at this. Ian, obviously your exposure to small businesses, and Stan, what you're seeing.
Yeah. I mean, just amplifying what we've all been talking about. It's that it's there, it's real. Matt, your perspective on the three ingredients that allow all of this to happen. End of the day, it's up to the small and medium-sized businesses to do something about it. And I'll go back to one of the 3 points I made earlier, that tone is at the top, very, very much. It's understanding what you've got, being able to treat managing cyber risk the same way you treat operations and finance and other kinds of risks as well. You understand it and you know what the risks are. You're in a way to actually be able to do some computations, if you will, even if qualitative ones, around, what's your exposure likely to be. You're able to look at, what would it cost to implement additional safeguards to prevent those kinds of things. And ultimately, it's up to the executive leadership of an organization to say, we're going to do this, and to have that ability with respect to IT, so that when IT comes to you and says, everything's okay, to be able to ask questions and understand the answers.
The only other thing I'd say, coming back to what makes a company, or might make a company be more of a target, you could make the case that the industry they're in, the business they're in, is a far greater driver. A company like Colonial, many companies, the impact is mostly on owners and shareholders. Colonial, you have to believe that they had all sorts of very senior people from the federal government and elsewhere leaning on them to get that pipeline back into operation. So the pressure on them to do whatever they had to do to get it back into operation had to be enormous, which to me is a far greater predictor of risk of being subject to cyber attacks. That pressure means you have to make a decision really fast. You can't wait it out and see if you can restore things a week and a half, 2 weeks later.
Mm-hmm.
I just got two things. One is I think there's unintended consequences too. I mean, of all things, I'm a healthcare company. We're protecting all our health information, but who would have thought that our payroll vendor would have gotten it? Had nothing to do with healthcare. So I think, again, I'm going back to we don't know what we don't know. So I'm not sure that it's necessarily in your line of business. You got to think about the whole overall perspective of how you're going to be breached, et cetera, or ransomware. The other thing is just a sort of a plug for the cyber insurance. The cyber insurance helps you sleep a little bit better at night, for sure. But I think that, because I have both sides of it, we had one of our companies had cyber insurance, et cetera, is the access to the partnership of people that can help you deal with these things and be proactive about it is probably more invaluable than cyber insurance itself, because you don't want to ever have to, look for your insurance for this. You'd rather it not happen and just have that comfort. So frankly, I think that it's worth its weight in gold just to have the partnership with the insurance plans and the IT experts, because 100 million companies, we don't have resources to have all the finest IT guys and cyber insurance guys or cyber people around. So we need that support. So anyway, just a plug for the insurance side.
Mm-hmm.
And just as a quick response to what Ian was saying, I think, as we still figure out what happened with Colonial, I would say the pressure probably even comes more from inside. The idea, if you're down, if you're not working and operational, the pressure that would happen, which is essentially what did happen, about the ability not to deliver. So I think your point is right on, whether it's from the federal government or just your own viability. And that's what we've certainly seen with the pandemic with small businesses is, they don't have the time to wait, because if they're out for a couple days and they're a key component of a supply chain, they lose their operations and they lose a lot of customers. I think those pressure points, I think, are very important.
Sorry, just one
Please,
other quick thing. The other risk or vulnerability for small businesses, many of them don't have the capital cushions to absorb even $100 or a couple of $100,000 worth of loss. A larger company, that's painful, but they'll get through that. A small business, a micro business, that's often an existential event for them.
Yeah, I think that's also an indicator that even as there's all the tools and the people, et cetera, the support for after the event, it's really important before the event. What are you going to do when IT comes in and says, Houston, we have a problem? If you're not ready in the executive suite to know what you're going to do, you're going to waste a lot of time. And that time, as you've just said, is truly, truly, truly precious.
And we saw that a lot from CRI over the pandemic, just small companies that had a very difficult, it was a devil's choice. They either pay the ransom and are economically impacted, or they don't, and they lose that viability over a couple of days and lose a lot of business. And so it's, to Ian's point, they don't have a safety net at all. I had seen a lot of questions about resources. And so I do want everyone to be aware of the resources of the companies and the entities that are on the line. Certainly Stan Stiles Secure the Village, with what Mastercard does, they have a small business resource. And if anyone wants to type that in, and we can say it out loud as well. For small businesses, a resource center, as well as the partnership with Risk Recon for storage. And obviously with the Cyber Readiness Institute at becyberready.com, we have our free self-guided program, as well as resources on how to answer a lot of these questions. Another question that we received is essentially, what are you seeing? Are micro small businesses, the super small businesses, more likely not to get insurance? And what are you seeing as the most prevalent barrier to them getting insurance? So we're talking about the very, very small businesses. Do they, from a calculation and an ROI perspective, do you see them opting out of it? Is it a financial reason or other reasons?
I would say it's industry specific, to be honest with you. A lot of the times when micro businesses buy, it's contractually driven, needing to be compliant to enter into an agreement with a third party. But I would say 5 years ago, probably a very low uptick rate. I think we've been seeing that trend upward in a pretty meaningful clip. As far as the biggest barriers, it's interesting, right? As we're kind of in this state of flux in cyber insurance market, right now it would probably be control-based answers on the applications, right? So in years past, there were carriers saying, hey, answer these 3 questions and we'll spit out a bindable quote for a truly small business. Nowadays, not so much, right? So they are still looking for that robust submission, albeit maybe not as much as they would for a company who's north of $1 billion, but they're still asking way more questions than they did in the past. But budget's always a concern, right? Because, unlike what we would, at Marsh call the risk management sector, the large business, we have to cater the program to meet budgetary restrictions regularly. So, the barriers of entry are mostly control-based. The reasons for not buying are sometimes budgetary, but it does vary across industries, I would say. I would say small tech companies certainly buy a lot. Small manufacturers don't really buy all that much, though that's changing. But there is some variance across industries.
Thank you. And so we've got just a minute left. And so we can do our lightning round. Any closing comments before I close it out and thank everybody? I'll start with Wes. Closing comments from you? No.
No, it was thank you for I actually learned a lot in this exercise, so I appreciate the opportunity. Thank you.
Thanks for being so forthcoming about your experience. Obviously, a lot of people can learn from that. Ian.
Just also, this is not a point in time type of thing. This is an everyday, every week type of thing. You can be secure today or in good shape today, and if a week later there's 3 patches out and you haven't put them on, you're materially worse off. So it's constant vigilance. It is not do it once a year or once every 6 months and then sit back and relax. It doesn't work that way.
Absolutely. Stan.
I'll finish with, because I'm agreeing with everything I'm hearing. Just put it in context. Benjamin Franklin has this great quote that distrust and caution are the parents of security. And that's the way we've got to look at this stuff. You know, we've got to distrust. I mean, we're particularly trained in business to, you know, we're trusting people. We're, you know, a customer calls us, we assume it's a real customer, et cetera. Don't make assumptions. Distrust and caution. Keep it in mind and flow from it all the things we've been talking about this last hour.
Thank you. And Matt and Mike, any last words?
Yeah, I'll go first. First of all, thank you for having us. Certainly enjoyed our time today. I would just say, you know, important to remember the risk transfer and the IT security, two separate but related issues. Cyber insurance certainly not meant to supplant good IT security, but meant to supplement it. It needs to be viewed as a part of your, you know, overall IT risk management.
Matt?
Yeah, I would just concur with everything. And Ian had talked about constant vigilance, and so important. For the insurance industry, we are a once a year transaction that takes a course of time, but the cyber risk problem moves so quickly, and it's why it's so important to marry it up with initiatives like CRI and the education part of the CMMC and other assessments. I think that, you know, there needs to be a lot more cooperation within government and industry and with partners like CRI who can kind of bring awareness of controls that are going to ultimately help the companies and help our industry as well.
Thank you. Well, thanks to all of you for your time. I think we've hit on some issues. What's clear is that we needed a lot more time. So maybe this will be the first in a series. There are a lot of questions, and I'm sorry we didn't get to all of them. But I think we started to at least dabble into the risk threat environment and hopefully some steps that small businesses can take. We have an open resource on CRI's website to be able to ask questions. And this is obviously something we're very interested in, to be able to help small businesses demystify this field and understand it. So with that, I will close out, but thank you very much to all of you, to Stan, to Ian, Wes, Matt, Mike, I'm sorry, and Mike and Marsh for your work in all of this. And hopefully we'll be able to do this again very soon. Thank you.
Thank you.
Everyone.
Thanks.
Thanks.
Take care.
Thanks.